Hello friends. Recently, new budget has been announced and there has been a lot of changes related to capital gain. And also there is an important change, or I will say there is two important changes related to NRI taxation on sale of house property. So in this video, I'm going to talk about that changes, that what has been the changes and how it is going to impact, whether it is beneficial to you or it is not beneficial to you. And third important thing, how you can plan for selling property if you're an NRI in new tax rules or tax amendment which has been brought by the budget. So all these things I'm going to discuss in this video. So let's begin. So friends, the first important part is thanks a lot because my last video on zero capital gain tax was well received and received more than I think 18,000 views. By the time I'm talking, it might have crossed 20,000. So thanks a lot for all of you who watched that. If you have not watched this video, please watch because it has very important, you can say, a message on how you can plan your capital gain tax if you are NRI and planning to sell your property. So let's begin with this topic, and let me announce one more thing that soon I'm going to make another video on two important tips or pro tips on how you can plan your capital gain so that in your whole life you don't have to pay capital gain tax. Yes, it's possible, it's legally possible, and that's I'm going to I'm going to talk in my next video. So please watch that video also and subscribe my channel so that you get all important updates whenever I'm posting new videos on NRI taxation and related topics. So let's talk about what has been the new changes. So two important changes in this budget has been brought into. The first change has been brought that there will not be any indexation on calculation of capital gain. Now, for those people who don't know what is the indexation, so let me tell you, it is a kind of offset of inflation. So for example, everybody knows that 100 rupees today is not equal to 100 rupees after 2 years. It is called inflation impact. So 100 rupees becomes only can buy good worth 90 rupees after say 2 years. To compensate that, government has earlier announced about the indexation. So it's simple like that. Suppose somebody bought a house for 10 lakh rupees 10 years before. So he's going to planning to sell now. So we have to multiply by some numbers to get the what will be the possible rate as on today. But I'm not going to get into detail because that provision is already removed. So now if you're calculating the capital gain, there will not be any indexation benefit. So for example, suppose you bought a property of 10 lakh rupees, say 10 years before, now selling at 1 crore rupees now, so your capital gain will be 1 crore minus 10 lakh, 90 lakh. And on that you have to pay the taxes. Earlier, we have to calculate 10 lakh into inflation indexation. So suppose that 10 lakh used to become 30 lakh and then we have to reduce from 1 crore. So our capital gain earlier was 70 lakh. So it is for sure now your capital gain will be more as compared to earlier due to removal of indexation. So this is the first important change, and how it is going to impact you I will talk in next topic. But now just understand the calculation has become more simpler I think for the government, but somehow it will not be very beneficial for some people. It will be beneficial for some people, that's definitely I'm going to talk. But as of now, the calculation of indexation has been removed. Second important change they have done, the rate of capital gain is reduced to 12.5%. Earlier it was 20%. So there was two balancing act. One way they removed something which was basically increasing your cost, and one way they reduced something which is a tax rate. So these are two important changes they have done. Now understand, second topic I'm going to talk how it is going to impact as an NRI when you're going to sell your property. Is it going to be beneficial or not beneficial? So let's talk about that. So first condition, if you are a seller who has recently bought their property, maybe 3 years, 2 years, or like 5 years down the line, it is going to be beneficial for you. Because if you bought a property, say just 5 years back or less period, then the setup or the what's called the indexation benefit was anyhow not much. So now you have to pay taxes at quite less rate, which is 12.5% as compared to 20% earlier. So for all those people who recently bought their houses like beyond 2 years, because now if you're holding a property more than 2 years, 24 months, it will be considered as a long-term capital gain, and the tax rate will be 12.5%. So all those people who are recently bought their house and they're planning to sell, it is time to cheer, because they are going to save taxes, almost 7.5% taxes they're going to save approximately. Now, for those people who are holding property from quite some time, for example, they bought a property 10 years back, or 15 years back, or 20 years back, or all those people who are planning to sell their inherited property, like those property which is bought by your parents or maybe their parents, and now you're planning to sell, that's a bad news, because you will end up paying more taxes. Now, because understand, there will not be any indexation. So indexation was working for older properties, but it was not working for newly bought properties. So I think somehow, if you are planning to sell very old properties, you will end up paying more taxes. Just consider a case. Suppose your parents in 1990 bought a property, say 1 lakh rupees. Now in 2024, you are planning to sell the property, say for 1 crore, for example. 99 lakh rupees will be your capital gain, and on that you will end up paying 12.5%. Now, there is one more thing which most of you might be aware, that if you are selling a property which has been bought before 2000, then there was two options for you. You can take actual cost, or you can take market value. Now, how to get market value? Generally, we used to get a valuation report from registered valuer. So the only question now remains, that for all those people who are planning to sell their inherited property, or who has hold their property for quite long time, because in that case tax will be very brutal, very big, right? So as soon as there will be any notification from government department regarding the valuation rule, I will definitely make another video and update you. But so far we can understand that if you are selling a old property, like at least a property which you have bought 2000 and beyond, there will not be any indexation, and you have to pay directly 12.5%. So as I told you, there was these two important changes which is now there, which is going to impact somehow NRIs who are planning to sell property. Now third topic I'm going to talk in this video, how to plan it when you already know there is a changes. So first thing, I'm going to talk about two important tax planning tips, pro tips in my next video, where if you follow those tips as an NRI or as a resident, you will never pay a long-term capital gain in your life. Either you are planning to buy a property or planning to invest in stocks. So please don't miss, because in detail I'm going to talk in that video about these two pro tax planning tips. But as of now, how to plan if you already like have planned to sell a property and the property is very long. See, as I understand, this budget has started its impact from immediate effect, because it's a not a regular budget, it's a budget after election. So first thing, already most of the whatever changes has been done, it is going to impact now itself. So if you're planning to sell a property, 2-3 things still you can do it. First thing, if your property is very old, I think you just wait for some time. Surely there will be a valuation report related clarification. Once there is a valuation report related clarification, you can simply take a valuation report, and that valuation report generally going to reduce your capital gain, because what happened in valuation report, we talk about value as on 2000 or value as on today, and then we can multiply back. So simply just wait for some time before we get the clarification, and then only sell. Second important part, still if suppose this property is like jointly owned by between you and your wife, then still you can plan, like, because there are a lot of tax saving options. For example, after selling the property, you can buy another property if you're holding less than two property. Second, you can also invest in bonds. For example, if you are selling a property and getting say 1 crore rupees of capital gain, and there is two seller like you and your spouse are co-owner in that, you can invest 50 lakhs in capital gain bonds, and then your capital gain will be zero. So already there is provision where, despite the fact these problems, you can reduce your capital gain to zero. So if you have any more queries on that, definitely you can ask in those queries in the comment section, or you can send directly to us. There is an email ID and phone number mentioned on my channel front page, so you can just call or you can take appointment from there. That's all in this video, friends. If you have more queries related to property sell or capital gain, or FEMA or any other matter related to NRIs, please talk to me. Please put a comment on this video, and either me or my team will come back and reply. That's all in this video. Thank you. Have a nice day.